Okay, let's unpack this. You've likely seen the headlines, maybe even followed some of the drama around AMC Entertainment Holdings.
Definitely.
It's a company that's been, well, right at the center of some fascinating market stories for a while now.
Hmm.
And their latest earnings report, specifically these second quarter 2025 results from August 11th, well, there's certainly a lot in there for you as a discerning investor to think about.
Absolutely. And that's really our mission today, isn't it? To take a deep dive into those results. We want to cut through the noise, pull out the key nuggets of knowledge for you.
Right.
We're using the official earnings release, plus a supporting news summary, so it's a pretty comprehensive view of how they performed. The idea is to give you that shortcut to being genuinely well-informed, without getting totally bogged down in every single number.
Good plan. Because it is a fascinating look, especially given where they've been.
It really is.
So, talking about fascinating, let's jump straight to the headline financials. Because, wow, for many people, this looked like a really dramatic turnaround.
Yeah, the top line numbers were strong.
Total revenues for Q2 2025, nearly $1.4 billion. It's $1,397.9 million to be exact.
That's a big jump.
A huge jump, 35.6% compared to Q2 last year, which is just over $1 billion.
Right, 1,030.6 million then.
But here's where it gets really compelling, I think. The net loss. It narrowed dramatically. Last year, Q2 loss was $32.8 million. This quarter, just $4.7 million.
That's a massive improvement on paper.
It is. But what does that shift really tell us? Is it just, things getting less bad, or is there real strength underneath?
Well, that's the key question, isn't it?
Yeah.
And what's fascinating here isn't just that the net loss shrank, it's what's driving it. The sheer scale of the Adjusted EBITDA increase that really stands out.
Okay.
It soared, really soared by an incredible 391.4%. Came in at $189.2 million, up from only $38.5 million in Q2 2024.
Wow, nearly 400%.
Exactly. And for anyone listening, Adjusted EBITDA earnings before interest, taxes, depreciation, amortization, it's a metric a lot of analysts watch closely. It sort of strips out the non-cash stuff, the debt costs, and gives you a clearer view of the core operational profit engine.
Makes sense.
And connecting this back, CEO Adam Aron actually highlighted this. He talked about the impressive operating leverage in their business. He said, as AMC's revenues grow, our EBITDA can soar.
Yeah.
And that's critical for movie theaters.
Yeah, those fixed costs.
Precisely. Once the theater's open, your rent, utilities, staff, mostly fixed costs. So every extra ticket, every extra popcorn bucket sold, the cost of seating one more person is tiny. So that extra revenue drops much more heavily to the bottom line. That's the leverage.
And we're seeing that kick in here.
We really are. And it's also worth noting, on an adjusted per-share basis, AMC basically broke even,
Okay.
which was way better than Wall Street expected. Analysts were forecasting an 8-cent adjusted loss per share.
So beating expectations pretty handily.
Yeah, it suggests the operational performance was stronger than many thought.
Yeah.
They're not just recovering, they seem to be improving underlying efficiency too.
Okay, so strong top-line growth, a big move towards profitability, operationally speaking. But the next big question, especially for a turnaround story, and definitely for you as an investor looking at stability, is cash.
Always.
Can they actually generate cash?
Oh,
Liquidity is king, right?
Yeah.
How did they fare, moving from those paper profits to actual cash in the bank?
Yeah, this is absolutely vital. It speaks to their financial health, their ability to fund things themselves without constantly borrowing or selling stock.
Right.
And the cash flow story, it's just as dramatic, maybe even more so, than the profit numbers.
Yeah, right.
Oh, yeah. Net cash provided by operating activity. So cash coming in from the core business, it saw a complete reversal. It surged to a positive $138.4 million in Q2 this year.
Wow. From what?
From a negative $34.6 million in Q2 last year. That's a swing of $173 million in the right direction. Massive.
Okay, that is significant.
And similarly, free cash flow, that's the cash left after they pay for operations and maintaining their assets, like theaters. That also flipped. It went from negative $79.2 million last year to a positive $88.9 million this quarter.
So they're actually generating surplus cash now.
Exactly. Enough from the core business to cover expenses and even invest back into the company. They finished the quarter with a decent $423.7 million in cash and equivalents, too. These positive cash flows, they're just foundational for stability. It shows they're becoming more self-sufficient. They can invest, maybe pay down debt, handle bumps in the road, without always needing outside money. It's a really key sign of a strengthening balance sheet.
Okay, so these financials are impressive. The turnaround seems real on paper and in cash flow. But it's not just happening passively, right? This isn't just the whole market lifting them up. What are they actually doing on the ground?
Right.
We saw attendance was up 25.6%. Over 62.8 million people came through the doors. Huge number.
It is.
But what's making those visits count more? What strategies are driving these results?
That's precisely it. It's one thing to get people in, another to maximize the value of that visit. And on that front, well, AMC basically shattered all-time records across almost every single per-patron metric this quarter, which is incredible.
Like what?
Okay, so consolidated admissions revenue per patron. The average ticket price essentially hit $12.14. First time ever over $12. Even better, maybe. Consolidated food and beverage revenue per guest jumped to a record $7.95.
$7.95 per person on concessions.
Yeah.
Wow.
Add it all up, and the total consolidated revenue per patron reached an unprecedented $22.26.
$22 per person on average.
Think about that. Every person walking in is generating over $22 for AMC. And that powerfully validates their strategies. Things like the AMC Go plan. It's not just tidying up. It's a real focus on enhancing the experience. State-of-the-art laser projection.
Right, better picture.
More comfortable seats, often those recliner types.
Oh yeah, people love those.
And a much bigger food and drink menu. Plus, they've really doubled down on their leadership in premium large format, PLF.
Like IMAX and Dolby Cinema.
Exactly. They specifically noted that those premium auditoriums run at nearly 3 times the occupancy of the regular ones.
3 times.
Yep. And they command a healthy price premium, obviously. So these efforts are clearly working. They're turning a movie trip into more of a premium event.
And people are paying for it.
And spending more when they get there. CEO Aron actually called this a flywheel impact. He said, you get a resurgent box office, plus their huge theater network with all these premium options, plus their marketing, plus their stronger finances. They all start happening at once and create this flywheel effect, reinforcing each other, driving more growth.
A reinforcing cycle. Makes sense. Okay, so operations look strong, pricing strategy is working, but the elephant in the room for AMC for a long time has been debt, high leverage.
Always a concern.
Especially now, with interest rates where they are, credit being tighter. How are they handling that side of the balance sheet? Because that's definitely something you, as a savvy investor, would be watching very closely. It's been a big worry.
It's an absolutely critical area, you're right. And AMC's debt load has been a major overhang, a big source of skepticism.
Yeah.
But there's significant news here. Just in July, so right after the quarter ended, AMC announced they closed some major refinancing deals.
Okay.
Specifically designed to strengthen the balance sheet. This wasn't just tinkering around the edges, it was pretty substantial. They got about $244 million in new cash, primarily used to pay off debt that was coming due in 2026.
Tackling that near-term maturity cliff.
Exactly what analysts called it. It addresses that big chunk of debt due soon, which was a serious liquidity risk. And crucially, they also managed to basically convert debt into shares, at least $143 million of existing debt, with the potential to do even more, up to maybe $337 million total.
Converting debt to equity. Okay.
So the key takeaway for you as an investor here is really profound. They've dealt with all of their 2026 debt maturities, pushed them out to 2029.
Pushed them out 3 years.
Yes. And this wasn't forced on them. It was supported by about 90% of their term loan lenders. The CEO called it a solid foundation to build on future growth.
So the lenders are on board?
Seems so. Think of it like refinancing a big mortgage payment that's due really soon. You push it out several years, maybe even reduce the principal a bit. It dramatically cuts that immediate pressure, buys them time, lets management focus on the growth strategy instead of just scrambling to pay bills. It's a big de-risking move.
Okay, so we've covered a lot of ground. Let's try and pull this together. What does this all mean for you listening in, looking at AMC as an informed investor? We've seen a quarter with really strong revenue growth.
Yep. Robust.
And much, much smaller net loss.
Big improvement.
That adjusted EBITDA soaring.
Absolutely rocketing.
And a huge positive swing in cash flow from operations. From burning cash to generating it.
Crucial difference.
On top of that, you've got operational records being broken, driven by those premium offerings, the PLFs, the better experience. And finally, this really important debt restructuring, pushing those near-term worries down the road. It really paints a picture, doesn't it? A company that's not just surviving, but seems to be actively, successfully turning things around in a tough environment.
Indeed. And the CEO sounds genuinely optimistic. He believes that industry growth momentum is going to continue, especially later this year, Q4 2025, and well into 2026. He thinks the movie slate looks strong. He definitely sees that flywheel impact picking up more speed.
There's always a but in investing, right?
Always. As with any investment, you absolutely have to consider the risks. The company discloses them, of course. No investment is risk-free.
What are the main ones here?
Well, things like the continued pace of the box office recovery. It's looking good, but it's not totally in AMC's control, right? It depends on studios releasing good movies people want to see.
True. Content is king.
Then there's the debt. Yes, maturities are pushed out, which is great, but there's still a significant amount on the balance sheet. That remains a challenge. We've also seen how labor issues like writer or actor strikes can disrupt content production, impacting the pipeline of new films.
Yeah, that can hit schedules hard.
And maybe looking further out, a more subtle risk. How will audiences react to movies that start using more AI in production? Could that shift preferences? It's an unknown.
Interesting point.
So, as a discerning investor, you need to weigh the clear strengths we've talked about, the revenue, the EBITDA, the cash flow, the debt management against these inherent uncertainties. That's key to being truly well-informed and making choices that fit your own approach to investing in risk. It's about seeing the whole picture, warts and all.
This deep dive into AMC's Q2 definitely highlights how a company can use smart operational moves and some complex financial footwork to pull off a pretty dramatic turnaround. Shows real resilience.
Exactly. I mean, it kind of leaves us with a compelling thought for you to mull over, doesn't it? As this whole industry keeps changing new tech, shifting habits, what's going to be the single most critical thing, maybe a metric or a strategy for AMC to keep this positive momentum going, what will really deliver that long-term shareholder value beyond just one, admittedly very strong, quarter? Something to think about.